GTii continuing on the downside path that we were actually implying it yesterday. Now, what does that mean for price action for the coming sessions? Well, let's go ahead and find out in this video. What is up, you guys? Thank you so much for stopping by once again on this fine Wednesday night. This is ARCa coming at you with a GTii technicals, raw price action, and statistical thread of analysis. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community in Discord called ARCab. With that said, let's go ahead and dive right in. So we are looking at GTii in the hourly chart here. We're going to start off the immediate short-term time frame analysis with the Crypstex ARC-Series indicators, which, by the way, are actually live now, and they are available to you. Just make sure to send me a DM on either Discord or Twitter, and we'll go ahead and go over the details as to how to acquire these indicators. Okay, so now we're going to start off with the ARC Armor indicator, which is comprised of several exponential moving averages, all algorithmically placed, very close in proximity to each other, so that we can gauge a wave of motion, a wave of directional motion. So in gauging that directional wave, we actually do get buy and sell signals. So for example, here it gave us a long signal at the low of this candle. We went up. In this case, it gave us a short signal here. It came all the way down. And the reason why I'm mentioning this right now is because we do have a short signal fired in the hourly time frame right up here, which was on December 12th. Okay, so on December 12th, we fired this short signal, and it hasn't since recovered. It has not printed a long signal for us to continue the upside just yet. Okay, now the ARC Enhanced MACD, which is another indicator that would potentially be included within the ARC series indicators package, is also suggesting a bear signal here. And now that bear signal is actually a newer print. That bear signal is actually printed on the 14th, which is just today. So this is suggesting a continuation to the downside. However, if you can take a look at the Bollinger Bands, which are right behind the MACD signal, you can actually see that it's tightening up and tightening up and tightening up. Okay, now usually when that happens, a move to either direction is likely. So in this case, we need to continue moving on through the analysis so that we can get a deeper understanding as to where we can go. Okay, so let's go ahead and look at the metrics for the statistical values, as there's still some questions. Pardon me, as there's still some questions coming up regarding that move to the upside that it has been made so famous, the 3,000% move to the upside. So please know that those metrics are absolutely they're statistics. Okay, they're not certainties. We have to make sure to take them with a grain of salt, because within the iterations, within the back test that I performed, the volatility represented by this indicator BBWP, by the way, versus momentum by stochastic momentum, that back test actually has several iterations to where some of those upsides were 39% or 100%. Now, some of them did measure 18,000%. Some of them measured 12,000%, 1,000%. So there's a lot of variable within that back test. So do know that upon the conditions being set for that upside move, the variables are coming with an averaged mean, and that averaged mean, it is 3,200% to the upside. But please understand that there are other metrics within that average that actually came out to a lesser value. So know that the conditions being set right now are still not at play. So the 32.25 day average that we have of duration from the firing of the signal has not met just yet. So I'm going to go ahead and go over those conditions one more time. Okay, so we're looking at the stochastic momentum indicator here, which I actually back tested on GTii particularly, and we are getting a 91% guess to the upside. So I'm talking about 91% guessing the accuracy of the direction of the asset, period. In this case, please take a look that we're still being guided towards the downside. Now, the reason why I have this yellow trend line here at the very bottom to where our current position is now is because I simply want to see how we move based on a 3-day candle read, since we're looking at stochastic momentum and volatility here in a 3-day chart. Okay, so this is a 3-day chart, and it is likely to take many days for it to start making that upside move. What we need are both of the averages from the stochastic momentum to have corrected and started an upside pivot alongside the volatility component of BBWP and the moving average of BBWP, both within the critical volatility zone, which I consider to be anything above this red trend line that my cursor is over, located at 90%. Okay, so as long as we do have both of those, as long as we do have both of the indicators meeting that type of condition, then we can start applying that month-long trend that we can potentially look at for an upside move. Okay, so I hope this actually clears up some of that confusion and some of that actually just straight up is just confusion. Okay, so please know that the signal has not fired yet. The conditions have not been set. We do need both of these up here. It would be better if we started printing these bars, which are actually 3-day reads, as we are in the 3-day chart. So the longer we're above here, the more volatility we're facing. Okay, so let's go ahead and move on to the last chart of this analysis. I actually, you know what? I do have something very, very interesting to talk to you about, and this is actually a misconception. Please pay close attention to this. Okay, I'm gonna make a box here, and this box actually represents a position that we would open at, let's just say, let me get rid of that right here, and let me get my drawing tool. It's going to be a little difficult to draw within TradingView, but it's okay. If we can ever find that tool, it would be just outstanding. Okay, so we're going to do it by text. All right, so let's just say that this is the $10 value of the asset that we're going to be purchasing, right? We're going to make the text a little larger for everyone to see. Okay, so we're going to buy at $10, and the price actually starts to go down the opposing way. We went long, and we didn't mean for this to go to the downside, but it did. Okay, so in this case, we are now 50% down. Where does that put you on 50%? So 50% coming down from $10 is $5, right? So we're going to go ahead and put $5 right here, and right under it, we're going to put that it's a minus 50% decline. Okay, so usually the misconception happens here. So we're thinking that in order for us to regain, because we're in fear now. So in order for us to come back and break even and I just want to be able to get my money back, we think that we're gonna potentially raise another 50% since we lost the 50% and come back to $10 and break even. So according to mathematics, that's actually a very false interpretation as to how the figures move. Okay, so I want to make sure that I clear this for you in GTii particularly, because there are so many people averaging down. Okay, averaging down could be a very dangerous thing if you don't believe in the company, if you don't believe in the overall outcome for the company itself. Okay, so here's the misconception: 50% from $5 is actually $7.50. Okay, so when we're coming up to that 50% mark, half of that is actually $7.50. So in order for us to be able to meet the break-even price that where we were initially at, the asset has to move 100% to the upside. Okay, so because from $5 you add 50% from $5, you're getting $7.50. Okay, so another 50%, we get $10. Okay, so please understand that sometimes when we're averaging down, the mathematics are actually working highly against us. So know that. Here's actually another example. You know what? We can actually do it like this too. Check this out. We're going to do a decline of, let's do the 50%, right? So we'll just say 50%. Here it is. It's going to get, we're not going to get any better than that. 50, wow. Okay, 50.06, right? So now let's take the opposition and measure from the downside to the upside, 50%. Here it is, look. This is actually a visual interpretation as to literally what I just said. Okay, so let's make it large so that everyone can see exactly what's happening here. And you can see that, wow, okay. There you go. You can see that the 50% rise doesn't take us to the very top of the 100% move. Okay, so the minus 50% plus 50% does not reach all the way back to break even. So math is actually working against us in this case. So this is just to put it in very simple terms. Okay, so please take into consideration how we average down and when we average down, because the math can severely impair the possibilities of coming back to a break-even figure, especially when we're buying at a non-controlled manner. Okay, so now that we have that out of the way and clear, and it's actually just kind of like a little pro tip for everybody. Now let's look at the immediate short-term time frame RSI. For the new viewers, new listeners, I do have the RSI diagram drawn here for you. I would like for you to focus in on these 4 zones here as they are located right over here on this RSI. Okay, so let's move on. Now the 30-minute immediate short-term time frame is now finding resistance from the pink line, which is representing a 14-day moving average, which is standard to any RSI indicator. Okay, we have found the resistance on it, and it's now suggesting a continuation to the way down. Okay, so this is immediate short term, so there could likely be some bounces along the way. Now the buy hourly is starting to slow that pivot. Okay, so we're looking at here a potential. This looks a little sideways trading. The moving average is giving us a hint that there is still some downside potential. But as you can see, the pivot from this area here, which was on the 9th of December, you can see that pivot was very strong. And now the pivot has started to kind of ease off a little bit and suggesting a potential find of a bottom. Okay, so now the 6-hour time frame is suggesting a continuation to the downside. It's not as aggressive either. The moving average is above us, which is bearish. The purple line represents the RSI signal. Okay, and now the daily time frame is suggesting still a very slight downside. Okay, so usually when we're looking at pivots like that, they're not so aggressive to the downside, opposed to this iteration here that happened literally from November 18th to November 29th of just solid downside. It's starting to slow off. Pardon me. So that to me now means a couple things. Yesterday we were talking about a potential target of 4730, sorry. Which now, since we're very close to these targets, we can actually start looking at the potentials of what it can be by a support range. Okay, so let's look at that. And you know what? We can actually move into a smaller time frame. Let's do the 8-hour and just take a look at what we have. Okay, so from the bottom of this iteration here, which was August 2nd, we have a range of 42.95. Let's just take a look to see how confluent that is to other sections. Okay, so what I'm looking at here, what I'm trying to look for is actually the relevance of the support, but 42.95 may be a little too easy. So actually, if you can see this, which is between January 13th, 2012 and March 22nd, 2012, there are several 8-hour iterations where we have used just an absolute just brick top here of 40.19. Okay, now if we were to consider wick lows, for example, this one down here, which could be the safest bet, we can actually see a support range between the absolute low, which actually I would rather, the 39.95, but let's see, 30.27 to 47.02 or 47.80, the implied target that we were looking at yesterday, could potentially be that support range now with the current price action that happened from today. Okay, so this is a very important area of support that we must not break. Now, please notice that the wick low that we noticed right back here, dated on October 8th. That wick low is, let's see, the value of it is, let's see, I actually can't get to it, but the value of it is 30.27. Now, there is another candle that actually touched right at that value right here. So you can actually see that candle dated on November 10th, touching a high of 30 cents. So it's, instead of 30.20, let's just call it 30 cents. So it went right at it and actually used it as a massive resistance before capitulating to the downside. Okay, so yes, that gives me now the understanding that we do have a support range between 30 cents and 47.80 as a likely area and a demand zone. Okay, so this is very likely a demand zone, actually. Now let's take a fib and just validate that. Okay, I mean, I know we can do some moving averages too, but everything is moving down so fast that there's literally nothing below us. Okay, yeah, there really isn't. So I'm going to take the SMAs out, and now we're going to just add an inverse Fibonacci ratio from the current iterations, from our current price action, right? So let's take it from this point to the high of the pre-market, and let's see here. So so we do have the 1.72 right at that 47 cent area that we're talking about, and there are several targets to the downside that we can look out for. The 1.618 located at 43.75, and the next relevant area would be the 2.618 at 35.25. So yeah, there's a lot of relevance within this support range. Okay, so we do need to keep that in mind. Yeah, so I think this is a pretty good place for me to leave off the video. Please know that I'm not a financial advisor. Take whatever I do show and iterate within these videos as just a form of entertainment. Okay, I need you to do your own DD and we'll be just fine. Okay, so yeah, if you guys, if you have any questions or concerns, don't hesitate to reach out to me on Discord or Twitter. I'll make sure to leave those links in the description below if I didn't say that already, like a loony. But anyway, yes, I wish you well. I wish you a very good night, and I will catch you at the bell mañana. Adios.